2022 was a tumultuous time for the global market. The Russo-Ukrainian War, the European energy crisis, the Federal Reserve's aggressive rate hikes, and such have contributed to the instability of assets. Even safe haven assets like gold experienced reverse trends in 2022. Gold prices broke through a near record level of the 2000 US dollar per ounce mark in March before falling more than 20% by September 2022. So the question remains, will market turmoil affect the prices of gold? Is gold still a worthwhile investment? Let's find out. Number 1. What are the fundamental factors that affect gold prices? Gold prices are affected by a combination of interest rates, market sentiment and risk aversion, supply and demand, and currency reserves. Interest rate. It is widely believed that gold prices possess an inverse relationship with increasing interest rates. In an environment of rising interest rates, bonds and other fixed income investments are more attractive to investors in the long run. Nominal yields on floating rate bonds tend to change over the life of the bond in response to the changes in interest rates. When interest rates rise, newly issued bonds tend to offer higher yields, leading to investors to opt for these investments over gold. Therefore, lower interest rates make these alternative assets much less appealing, driving investors towards gold instead. Unlike other forms of investments, gold does not generate an annual yield, and a low interest rate would not affect its value, further enhancing its appeal. The negative correlation between gold prices and interest rates can also be seen in this chart, which showcases the relationship between gold prices and the US 10-year Treasury yields over the past 5 years. Market sentiment and risk aversion, supply and demand factors. Gold is often used as a hedge against macroeconomical events. Macro events such as the Russo-Ukrainian War, inflation, and so on are examples of events that would most likely affect the monetary stability of a country's economy. Once these major catastrophic events occur, more people will be stimulated to invest in gold rather than other assets. The supply and demand factors are also one of the reasons for this occurrence. From a supply perspective, gold is a combination of mining and recycling. However, gold is a finite resource, and reports also state that the mining industry's supply of gold will deplete within a span of 20 years. Barring new discoveries, the gold supply will be more reliant on recycling in the coming years. Unless the demand for gold falls, gold prices are most likely to stabilize or rise sharply in the near future. From a demand perspective, gold demand derives mainly from jewelry, central bank reserves, investment in bars and coins, and manufacturing. It is this diversity of demands that helps gold retain its value. Currency reserve. Central banks typically use gold, US dollars, and other currencies to diversify their reserves. Since gold is a natural inflation hedge, it is the commodity of choice in many countries. Gold's inverse relationship with the US dollar is another factor that makes it attractive. This is because gold is generally dollar-dominated, as a stronger US dollar tends to push gold lower, and vice versa. This enables central banks to protect their reserves during periods of high market volatility. The chart indicates how the two have been negatively correlated many times over the past 5 years. Number 2. How major events impact gold. In 2022, major political and economic events that occurred around the world have affected the price movement of many financial assets, even gold. US Federal Reserve aggressively raises rates. To combat high inflation rates in the US, the Fed has raised interest rates approximately 7 times in 2022. In the case of aggressive US interest rate hikes, the value of the US dollar will naturally soar. As a result of such an occurrence, gold prices will naturally fall. However, the CPI data released by the US on November 10 showed signs that inflation is waning. Under these expectations, the market quickly rekindled the hope that Fed would slow down the pace of interest rates as gold rose in value. Soar or fall, is gold a good investment? What will happen to the price of gold in 2023? First, we would need to consider a few varying factors which include the US dollar trends, economic recessions, and the black swan theory. US dollar trends. The Fed's next move in interest rate will directly affect the value of the dollar. Gold is likely to take a plunge once more as opposed to the dollar. If the dollar plunges, gold will likely rise in the short term. Therefore, investors are advised to keep a close eye on the next rate hike that the Fed predicted in March of 2023. Economic recession. Traditionally, gold prices trend upwards in an inflationary environment where opposing currencies lose value over time. Gold typically performs inversely to market conditions as displayed during the 2001, 2008, and 2009 global financial crisis. If the US economy falls into a recession, the market expects the Fed to start reducing interest rates to boost market confidence as markets tend to move in advance. In short, the bullishness in gold could be due to expectations of prolonged dollar weakness. Gold prices will remain resilient if the global economy is contained. Black Swan Theory. It is used to be thought that all swans must be white because no one has ever seen swans of a different color. However, explorers in the 17th century discovered black swans in Australia, thus disproving the entire theory. The lesson is that what we think is very rare may be more common than what was perceived. In finance, the best idea to mitigate black swan events is to take long positions in assets in which the prices rise during a systematic crisis. Disruptions in the financial system have serious negative effects on the internal market and the real economy, and gold is one of the safest options to protect an investor's wealth during times of uncertainty. We hope that everything you've learned today gives you a better insight to how gold is utilized. Be sure to like, share, and follow for more actionable investment insights.